Welcome back to Crypto Clarified, the podcast where we break down the fast-moving crypto landscape and what it means for investors. If you've been with us for a while, you might notice things sounds a little different. Just like the digital asset space itself, Crypto Clarified is evolving. We're starting a new chapter with new voices. My name is Vinh Tran, Associate Director of Business Development at Wisdom Tree Digital Assets.
My name is Dovile, Director, Digital Asset Research at Wisdom Tree Europe.
And today we're joined by Raja Chakravorti from the Stellar Development Foundation. We're going to be talking a lot about Stellar as a foundation, what they do, their vision and strategic goals over the next 3 to 5 years, what tokenization is, the use cases behind it, the tokenomics behind Lumens, and what's really going on in the industry. Hello, Raja. Welcome to the show.
Thanks for having me, Ben. It's an exciting Halloween for me because we're getting ready and there's candy in the bowl.
Love it. Love it. It's an particularly exciting weekend in New York City. As you know, it's a New York City Marathon, and I know you run a few in the past. Any tips?
Well, I've done 4, and I'm taking a year off in between. I think you have one coming up yourself, and you might be running this weekend. I'd just say hydrate and salt. That's all that really matters. And you know what? When it's painful, just put a smile on and it'll help you get through.
All right, noted. Will do. I think it's a good way to start because I think, as we talk about crypto, as you know, this industry feels like a marathon. It's definitely not a sprint, right? And you being, the CPO of the Stellar Development Foundation, you've made a lot of pivots in your career. You've had a career across fintech, payments, partnerships. You've worked at Plaid, PayPal, and I think that's a great start. Let's start there. Let's talk about your pivot and, what kind of work you're doing right now and how you've found your way to the SGS.
Yeah, absolutely. Well, thanks for the question, Dan. I mean, when I came out of school in the early 2000s, for me, like it was fairly logical just to go into banking. So I was a banker for actually a number of years. Started at JP Morgan, that went to Goldman Sachs, working in structured finance, working in mortgage-backed securities, and boy, that was a whirlwind of a time and a whirlwind of an industry. I think coming a little bit out of the financial crisis and kind of late 2007, 2008 timeframe, my focus was really on, hey, well, how do I start thinking about financial empowerment and how do I start thinking about leveraging technology to start to create, economic advantages for a lot of people. And so, after a stint at grad school, found my way to PayPal and thought it was really exciting because at the time, mobile technology was really starting to accelerate, and PayPal was heavily investing in mobile, both from a consumer side, but also from a merchant side as well. There was the rise of the point of sale system, the mobile point of sale system. So we're starting to see merchants get empowered in a way to be able to compete on a much greater basis. Consumers having access to new products that maybe they haven't been able to before. And that was really exciting because when you start to see consumer empowerment through a mobile device and getting access to things like credit, that really expands the paradigm of what you can build and who you can build it for. And so that was really kind of that initial entry. PayPal was an amazing training ground for me because PayPal was touching a lot of different things, certainly like merchant consumer services, but on the cross-border basis, really starting to focus on a global network. And one of the things I observed is that the even though you can leverage certain aspects of technology, the existing and legacy rails that it was still built on still created a lot of friction. And so even though you may have been able to do things a lot better with technology, there was still a lot of embedded expense and time that was wasted through different processes. And so that kind of stuck with me. And so as I was kind of sticking through each of these different opportunities that I went to in fintech, what I really thought about is, well, how do you create greater access to the financial system? How do you use technology to make that happen? And then there was this one additional component I started to realize, which is, mobile creates a lot of proliferation, but there was this overlying concept of like, how do we help empower the underbanked or the unbanked? And one of the things I realized sitting in kind of for-profit companies is that even though it was a really important mission, it was practically not a great business proposition all the time to work in that angle because there was so much embedded expense in being able to access that cohort of folks. And what I saw with blockchain was this design that actually allowed accessibility into what we describe as the global majority. Some people call it the global south, but like a lot of the emerging markets, but actually reduces the cost, improves the time horizon, creates global liquidity, and actually starts to make that be a really significantly positive value proposition. And that was really exciting to me because when I think about like things from a market TAM perspective, now you actually have this incredible opportunity to touch into so many different areas, leveraging technology that is only through this kind of re-architecture of the financial system, which is blockchain, so that this now becomes something that not only is good for humans across the board, but is also good business. And so that was really kind of the jump into what I've been doing.
Amazing. I think it sounds like you've had a lot of a very strong personal tie to the industry, and I think a lot of personal lived experiences. How would you say that's shaped what would you say is your North Star, or at least the priorities you have as, the CBO of the foundation?
Yeah, well, what I thought was wonderful about Stellar and why I really landed here was this real focus on building a accessibility so that we can increase availability and adoption for everyday financial services. And what we have really focused on at Stellar is truly trying to figure out whether you're focusing on payments, on savings, on lending, on credit, on wealth management, investment, all of those things. How do we create accessibility so you create real utility? And so, as we've stepped into what we are trying to do at Stellar, I think our goal is really kind of simple. We're trying to bring the world's financial system on chain. And I think the kind of seamless thread that I see through this is there's clear operational efficiencies that are achieved by bringing finance on chain. And there's also massive market opportunity in bringing access to this global majority that currently doesn't have access to the financial system as it's currently structured. And so when we think about what we can drive through that, the core focus areas, particularly over this past year, have been okay, well, one, how do we create an infrastructure designed for payments with product market fit that we're seeing in the remittance space and cross-border payments, but also in things like global payroll and payouts, really accelerating that adoption. The second one has been around asset tokenization, which, certainly I think Vin, you and I have spent a lot of time talking about, but the ability to start to bring assets that may not have been accessible to a lot of folks, but are really valuable because they're relatively safe, but they also bring this thing called yield, which allows for money to, I like to, I don't know if this is the right terminology, but like money can be lazy where it just kind of sits there, or it can actually be active. And when it can be active, now you're actually creating this incremental layer of access to a lot of people. But there's also all of these other aspects around asset tokenization. So that was the second. And then the third is really around decentralized finance, or DeFi, as we call it. And this is really, in my mind, on a basic system, how do you bring kind of access to like credit activities and investment activities to a cohort of people who may not have had that, but again, gives them an ability to start, accessing better finance and or, earning money in different ways. And so those have been the North Stars that we've been driving towards. And I've been really excited to see the growth that we've driven this year.
And for me, the most fascinating thing about Stellar is you aiming to serve the unbanked and underbanked individuals. But how does that work in the real world? Let's imagine I'm in one of the emerging market countries, somewhere down in South. I have no bank account. How can I use Stellar in my day-to-day life? And what would be the actual use cases?
Yeah, absolutely. So, I mean, I'm going to throw a couple stats at you. Hopefully, it doesn't get too stat heavy, but like, I think there's a projection that the global middle class is expected to be spending about $29 trillion more by 2030. Now, if you look at the middle class market, depending on kind of how you consider it, it's growing at roughly a 0.5% to 1% per year. But emerging economies are seeing growth of 6% or more. And so if you're thinking about being in a financial services company, like you can optimize for 1% annual growth in saturated markets, or you can think about building out 6% growth market representing 60% of the world's population, right? That seems like a really foundational way to think about it. So that's kind of like the mental model I think a little bit about when I think about what we invest in. Practically speaking, the things that we have been able to do is we built this blockchain globally in mind. And so a core consideration of what we do is focus on building out our ramp capabilities. And when we talk about ramps, we literally mean, okay, how do you get fiat currency into a digital currency? That's the on-ramp. And then how do you transition the digital currency into something usable depending on your market? And so we have built a incredibly strong network. We call it the Stellar Anchor Network, where we have kind of canonical partners. One example being like a MoneyGram, for example, which has 500,000 roughly locations across 170 markets, but really building out a capability so that when we were able to transfer a digital asset into a local wallet, that user can then either do, one of several things. They can hold a asset, and in most cases, it's a US dollar backed asset, a stable coin, within that wallet, and they can use it as almost like a mobile bank account in many ways, right? It can be used as a currency hedge, an inflation hedge, but really just a way to like have access to dollars, which in many emerging economies is very, very valuable because it is a safe asset relative to maybe other things they can do. Or they can go ahead and try to create utility for it. And those utilities look like maybe three different things. One is transfer it into their existing banking system. Two is be able to use it in some sort of commerce format, whether it be able to pay at merchants or kind of fund like a local debit card or do something like that. And the third is to like literally cash it out. So, again, like going into one of these locations and literally being able to turn that currency into something into local fiat. That's really the focus that we've been able to do, is really thinking about how do you build that off-ramp network really, really well? How do you make it available in some of the hardest to reach places? And how do you make the transfer of that asset be almost instantaneous at almost no cost? And that's really been the focus. And we had a number of examples of institutions that have used that, whether it be for payroll or even humanitarian aid. For example, like the United Nations, UNHCR, leveraging Stellar so that they could deliver aid into places like Ukraine or into Argentina, basically markets that had tremendous disruption in their existing banking system, be able to basically transfer that asset instantaneously, allow people to cross a border perhaps and still be able to transfer that asset as well as be able to cash it out. That's been like a really powerful sort of use case. But again, when I think about like that sort of use case, to me, it's like, wow, if we can serve the hardest markets, like, aid and disaster relief, which like goes into these places where, there's huge disruptions. Well, that can serve really any enterprise business looking to solve, any issue or really fund any accounts that they have, no matter where it is.
Fascinating use cases. Thank you. Because I always, when I talk to investors all across Europe, I try to highlight real world use cases for how blockchains are actually embraced by institutions and individuals. And these are prime examples. But if you take a few steps back, imagine that you're talking to a 5-year-old. How would you explain what Stellar Development Foundation does without using a word blockchain?
Yeah. We help money move where it needs to move as quickly and as cost-free as possible. And I think that's simply what we're trying to do. Yeah. One of the things one of the things I like to think a lot about is, what is the concept of money, right? So we have a traditional mindset around what money is. Initially it was cash, then there was like a digital cash element. But now with the way blockchain has, I think, really unlocked different opportunities, it almost takes on a different meaning. And so when we talk about like real world assets, tokenization, like I think like my nirvana experience is, hey, I don't want to just look at the cash in my bank account. I want to be able to look at like what is my entire net worth comprised of. And maybe some of that is like locked up into some sort of investment. I can't really access it. But like my most optimal way to be able to spend is to be able to just assess at any given point, where do I want those funds to come from? And with blockchain and what we've seen with these advances in RWAs, we were talking a little bit about like money being lazy versus active. Like if I have money in a money market fund and I can now go ahead and use that to make a transaction happen, now it actually create a lot of efficiency. And maybe I don't want to tap into like my cash, but I also don't want to unwind my full money market fund position. But now, like on a tokenized level, I can do like microtransactions off of this and transfer it. Um, but if I'm not doing that, that money is sitting there and it's earning yield for me. So I'm actually like making more. And so I'm creating this new avenue where instead of money just being kind of stagnant, it's actually growing and it's active. And now I can access any point. And so to me, that's like the coolest thing about blockchain innovation is now you're creating accessibility to your whole financial profile. Whereas before it used to be like super limited into just a small segment.
Yeah. I think that's really crucial, and I think that's the differentiator when we talk about crypto, and the buzzword you hear a lot is utility, right? And I think you pinpointing the idea of payments being one of that or tokenization being another, I think that makes it much more clear, for sure. And I guess to double click on how the SDF supports that. You mentioned it and you alluded to it being a global system, right? Where it starts with emerging markets, but how do you see that connectivity between the developed market per se and then the emerging market? And then how do you guys as the foundation support protocols that build to that?
Yeah. Well, I love that question. I mean, look, we let me kind of take the protocol support first. I mean, we have seen just a real explosion for developers in the Stellar ecosystem. So, we've really thought about how do we make and connect the work we do to real world use cases. And so when I think about real world use cases, it's not really things that are we're not necessarily like talking to developers that are building like super volatile products that may not have like a direct application. We're really trying to talk to developers who are focusing on building products that, again, give access to like lending or, get access to credit, get access to kind of new ways to think about um, hedging or other sorts of things like that. Right? Things that like are really financial services, but moving it on chain. We've seen a 35% increase in the number of developers bidding on Stellar this year. And almost over 140% increase in developers on Stellar compared to 3 years ago, which means we have one of the fastest growing ecosystems, I think, in blockchain. And that's notable because we've been around for 10 years. But what we're seeing now with all of these, I think, macro changes that we're seeing, certainly at a policy level, that's been a huge accelerator for us. But we're now seeing this real attraction to saying, okay, well, we have these products. How do we build them and how do we kind of access this incremental value that perhaps we were a little hesitant to do before because we just weren't sure if we would be on the right side of regulation. And so that's like a big thing that we've seen. By the way, we've seen a 7x growth in our DeFi ecosystem year over year. So like again, like these are big changes. And we're seeing this massive scaling up in RWA payments, over 13 billions of our $1 billion of RWA payments so far this year. What we've really tried to do as we think about those use cases though, is again, they have to be like real helpful ones. And so, I talked a little bit about MoneyGram in terms of like connecting, I forget what you call it, like the market that is already mature to the emerging market. You use better terminology than me, but we really are focusing on enabling individuals to tap into the benefits of stable coins through this solution, right? So you've got folks who are sitting in mature markets who are making money and they maybe are sending a remittance to a family member in an emerging market. And that cost traditionally could have been upwards of like 10% per transaction. But what we built through this system, which is the blockchain, well, and I think the reason that happened, right, in like kind of the old version of financial services is they're different networks, right? So like if you're sitting in like the United States, it is built on one network. If you were sitting in like, an emerging LATAM market, it's sitting on a different market and the reason a different network. And the reason why there's so much cost and there's so much time is because it has to move through an infrastructure that starts to connect it. And so now you're going through this correspondent bank network. Now what you're talking about is verifying the time. Oh, by the way, there's got to be a verification of the identity. There's got to be a verification of all of these different things. And in each and every component of it, there's a cost associated with it. So like it just compounds on top of it, right? And what we're doing is taking, okay, here's two disparate networks. Now you can connect one network, which is a through line. And that's effectively, again, in my simplified mind, like that's what we're doing here. And we've been able to do that. And, this is this has facilitated, tens of millions in total transaction volume, signifying this growing demand for this bridge, if I almost think about between traditional finance and digital assets. We talk about money market funds. Obviously, we do a lot of work with you guys, but Franklin Templeton also launched their first tokenized money market fund on Stellar back in April 2021. This is hundreds of millions of dollars of asset volume, which can now be accessible, again, through to different folks who may not have been able to do. One of the things I think then you and I talked about before is if you think about money market funds in total, I think the average cost to enter a money market fund is like $3,000. That's like a minimum balance typically. Now, like you can bring that down to tens of dollars. Boy, now all of a sudden there's a whole new paradigm of folks who can get access to a highly rated asset that again drives yield. And then we talked about UNHCR, and I continue to think this is one of the best examples in all of blockchain because, the reality is like with all of these shifts, like it is still early. When I think about like re-underpinning financial services, which I hope is what we're all talking about, there's so much opportunity for us to go to. But like I think about this idea that, UNHCR, they piloted our aid disbursement solution, which was the Stellar Aid Assist, which is really just the Stellar disbursement platform. It's just a disbursement tool. But this tool allows the delivery of cash assistance directly to people who need it quickly, efficiently, and securely. But more importantly, like if you're in a donor situation, you need each of those dollars to be transparent and traceable and auditable. And so when I think about like institutional use case, these are the things that I think are really important: auditability, traceability, like lightning fast, low cost, all of those things are important. And I think that's what's going to be important. And then, obviously there's innovations that we're starting to think about that are going to be incrementally important to institutions that bring access to more users, like privacy, which is an area that we're heavily investing in and starting to think about like, well, if you're on an open public blockchain, how do you also bring in the privacy elements that are critical so that institutions and consumers feel very comfortable and safe transacting on these chains.
Yeah. I think you said it best, right? Like we truly are in the early innings of this, and I think that's what makes it exciting. And kudos to you guys. You're right. The growth that you've seen and done has been phenomenal. And I think I got to see it firsthand. I had the pleasure of being down in Rio with you for the Stellar Meridian conference and to see, the excitement in Brazil and the overall LATAM market. And I think we talked about it in global, and I think that's what makes the industry so exciting. And to kind of focus on that point, right? You mentioned this global market, you mentioned these specific use cases. How would you say Stellar as a blockchain then? So trying to not be too technical, but how would you say Stellar as a blockchain differentiates itself from other blockchains, from other L1s, L2s? And yeah,
Yeah. So what I think that we have really tried to focus on is making sure that um well it's almost like there's a couple elements. Well, I maybe let's call it four elements. One, we talked a little bit about speed. So, like Stellar, like our average block time is about 5 seconds, with finality being instant. So, again, no matter where you are in the globe, no matter what corridor you're stranding money to, you're having like almost atomic settlement of the asset. What that I think that's critical. Two is the cost. I think our average cost per transaction is 0.0005 cents, something around those lines per transaction. So, I mean, we're talking about like micro percentages of a penny per transaction. So it's creating accessibility. Institutional grade uptime. I think like I like to call it like we're like Six Sigma uptime. It's 99.999% uptime in the history of Stellar, which has been around for 11 years. I think that's super duper important and is critical, and it is highly I think it is the type of thing that makes blockchain adoption become something of comfort. And then I think just the global reach. And so this focus on ability to have this massive network of ramp capabilities. Um, we talk a little bit about like blockchain versus like traditional finance. And in my mind, th- there shouldn't really be if we do this right, there shouldn't be a distinction between these two things, right? It should be like a single thing and a technology upgrade for the system so that you're able to connect all of these products and all of these things. Like there's a reason that I think the traditional financial system has worked really well in certain regards, but it's had some severe gaps in other regards, which is how do you create that access? And so we at the foundation have focused on like how do we make sure we connect these things. I talked a little bit about some of the things that we have offered on the blockchain, but things like asset control functions that are native, like the ability to issue an asset, but the ability to also to freeze or claw back as necessary, to offer multi-sig, to offer whitelist, blacklist, KYC capabilities. All of those things are things that we built into the network so that we can actually bring institutional comfort. And when I think if we focus on bringing institutional comfort and being able to deliver institutional capabilities, the institutions themselves are the ones who, at least in like the more mature markets, are touching the greatest majority of consumers. And if we're able to connect them, then that is going to help us facilitate kind of all of the product market fit that we are seeing and then accelerating beyond it. And again, I think the product market fit we see like for sure in stablecoins, like you see cross-border payments, you see remittances. I think we're still trying to figure out the other ones, to be honest with you. I think there's obviously like a lot of hype. A lot of people want to talk about it, which is super great. I'm always super excited about it. But ultimately, what we want to make sure is all of these things work really well. That'll give comfort for like merchant networks to work really well. It'll create opportunities for consumers to get comfort with holding assets like this within their wallets, and then start to make these assets top of mind. And ultimately, I think that's where it's at. I'll add maybe one last thing, which is landing assets is step one, but velocity is where the real work begins. And so when we think about like some of the metrics that we hear people talk about, like TVL, just like, volume. But what we really want to do is turn volume into velocity. And that means getting assets into wallets and really powering everyday financial services. So that kind of ability to utilize assets for everyday financial services like lending, borrowing, yield, donations, payments, like that's what we are actually focusing on doing. And those are the types of innovations that we are either using our foundation to provide funding for really new and cool protocols or helping to facilitate and build those in partnership with some of our super strong partners that are out there. You guys included, of course.
Thanks for that. I wanted to expand on that because I think you mentioned humanitarian aid, and obviously that world is very different than the world that Dovile and I and that we operate in more on the traditional finance perspective, right? So I think how can you explain that in a way to describe the benefits of using blockchain, for example, for humanitarian aid, and in a way that makes it relatable for our listeners to understand?
Yeah, I mean, look, I think about it this way. So a decade ago, like sending money across borders took days, cost too much for those who needed it most. But today, like you can be like a mother in Lebanon, a farmer in Kenya, a student in the Philippines, you can all receive funds instantly. And it's the innovation in stablecoins, digital wallets, and blockchains that's transformed this kind of humanitarian aid into a global payments lifeline. And I think the humanitarian example is very powerful because what it does is it tests technology under pressure. And I mean, frankly, like lives will literally depend on speed and trust. But what's really happening underneath isn't a breakthrough in humanitarian payments. It's a payments breakthrough. And that shows the humanitarian example shows proof of how blockchain infrastructure can move value kind of anywhere instantly. And so, from our perspective, like I think we have always been at the center of that evolution, helping, organizations like UNHCR, like I mentioned, but also Oxfam and others moving funds securely using stablecoins where in regions where banking access is limited. And I think this is really important because again, we talk about how this is an example because it tests the technology under pressure. And so those rails are that move humanitarian aid today are I think the rails that global enterprises are going to use tomorrow because it all comes down to the same kind of basic building blocks. Payroll, disbursement, remittance, settlement. But that's what you're doing from like a humanitarian aid perspective. And that is the thing that I think global enterprises are going to value the most. And I think I'll just put the plug here is I think Stellar is positioned to really deliver this exceptional value to enterprises of all sizes. I mean, down from like when I say enterprise has this like kind of mental model of like big company, but I mean in enterprises and like small business all the way up to like a multinational. Um, because the point of the blockchain that we developed is to make money move at the speed of the internet, no matter where it needs to go. And I think this is how you think about connecting that use case with everything else. And for me, my hope is that enterprise institutions at scale understand and see that this is really, really valuable. And we will see this, great acceleration.
Perfect. Well, let's bring Lumens or XLM into picture. Many know it as a native token of Stellar blockchain, but few actually understand its function. Would you mind just talking about that? What Lumens do on Stellar blockchain, how they are being used for day-to-day operations?
Yeah, absolutely. So one thing just to kind of really call out here is, the Stellar network was made to support digital representation of any currency. And in fact, I think stablecoins were on Stellar before they were called stablecoins. And we always knew that stablecoins, and not just US dollar denominated ones, by the way, but stablecoins of any sort and payments were the killer use case. But yes, we have our own native token. It's called the Lumen. And it's got a really special role in our network. So get a little into the nerdy details, the Stellar network requires that each account holds a small number of lumens at all times. And the reason is that it's part of the fundamental design of our network's ledgering system. So without some nominal barrier costs, the ledger can always become filled with like spam or nonsense. Or used in kind of like an arbitrary database system. And that would kind of defeat the intent behind a network like us to be fast, efficient, payment system, which is why what we built with the Lumens is this requirement for a minimum balance on each account and a very small per transaction fee that are put in place to be deterrent costs. So now, like the minimum balance for an account is like a lumen, and per transaction fee is a fraction of that. So it's small enough to keep the network widely accessible, but it's big enough to discourage large scale bad behavior. And that's really, I think, what the value is here. But I'll say that like one of the important byproducts of that network token is that it's eased the movement of money between users. So everyone has lumens on the network, and so lumens can be a medium of exchange between otherwise illiquid assets. So like imagine, so lumens or XLM as people will know it. It's a bridge asset between different currencies. So especially in quarters where like direct fiat to fiat exchange pairs don't exist, like imagine you want to send Mexican pesos to Philippine pesos, like MXN to PHP. The network can automatically convert MXN to XLM to PHP efficiently. And so that's really, really powerful. The other piece of it is, when we designed the network, we also, actually just about 2 years ago, added on a smart contract functionality. It's called Sorbon. That's the smart contract platform. And what we've designed with the XLM is creating this opportunity for resource management, security, and economic alignment across the network. So so it's used to pay compute fees, storage fees, transaction fees, and it's used also as collateral or deposits within DeFi protocols, and then finally like bridging of assets, as I discussed, liquidity medium in AMMs or automated market makers, or a settlement layer for cross-chain or cross-currency transactions. So that's really what the Lumen is for. I will say, unlike some other blockchains, lumens aren't mined or awarded by the protocol over time. All the tokens were pre-issued. And we use this consensus protocol instead of something like proof of work or proof of stake, which makes it energy efficient and fast and allowing for the transaction to settle really, really quickly. And so, I think the inherent design of it is really to just facilitate this really fast network that is somewhat immune from the colloquial garbage that you might see in other places, and can be used as a medium to help this idea of connecting disparate networks through a currency that is able to do kind of all of the trading there. So we're really excited, and we continue to be really excited that we have that token. But ultimately, from our perspective, we are a network that's used to facilitate the transfer of assets, and whether those be stable coins or other assets, that's really what we're focused on.
Fully interested, and thank you so much for a detailed answer. Now let's look ahead. What are your plans and targets for the next year, for 2026?
Yeah. So, I think I talked a little bit about like growth I mean, that's the required outcome, I think, for startup success. And when we focus on this, I had mentioned everyday financial services. Our goal is to increase the availability and adoption of everyday financial services on Stellar. We talked about like payments, there's savings, there's investments, there's lending, there's credit, there's wealth management. These are all the areas. And so for us to really do that, I think there's a couple things that we want to lean into. The first is what is necessary for broader adoption at an institutional level. And I think one of the most important things is privacy, which I kind of touched a little bit on. And that work has started, and I think we're really leading the way. We think it is the opportunity. Um, to accelerate adoption, I think we need to solve privacy on chain, and we will. Um, we're moving billions in institutional volume. We're bringing partners, builders, and regulators, importantly, together to unlock this space. And so that's really been our focus. Um, More institutional growth and adoption. I think there's a lot of projects that we have been working on. And while I can't go into detail on all of them, I'll say there's some really exciting institutional projects coming in 2026. There's like a pan-European bank consortium that's looking to connect over 100 million retail and corporate clients across 40 plus countries through regulated use case and cross-border payments. We expect that to happen. There's an institutional, EUR stablecoin issuer launching an EUR dominated stablecoin backed by major asset managers and liquidity partners. That's really exciting. A lot of focus in Europe, certainly, launching other regulated token infrastructure funds under, ELTIF 2.0 and MICAR, which just continues to open the paradigm. And then, other asset managers bringing kind of retail focused private credit onto Stellar. Like these are all the types of things that I think will create a lot of growth. And honestly, we're seeing like hockey stick growth with assets that have launched this year and our pipeline momentum and continuing into Q4. I mean, ultimately, I think here's what really happens in my mind. We're going to be able to get products issued on chain. Um, but that is really just the first step. Once they are issued on chain, how do you create go to market in a way that allows for those assets to be put in the hands of people for real use case? Because again, like I care very little. I might get a little wrist slap for saying this, but like I care very little about just like driving up like value locked on the chain. Okay, great. But like what does that really do? Like, am I actually helping somebody facilitate like a new experience? What I really care about is this velocity metric. And to be honest with you, I don't see velocity. Like, if you look at some of the external things that people reference in terms of saying, oh, let's measure value of like blockchains, and we're going to measure, we're going to look at these couple websites and they're going to say, here's the biggest or whatever. What I think is missing is this capture of like velocity. But I think you know, the structure of us as a foundation and the ability to take like a long-term view, we're gonna really focus on velocity as that core metric to make sure that more so than volume, that is the type of thing that drives growth. And as we communicate with our partners, we'll talk a lot about how do we continue to drive that and then show real utility because ultimately, if you take kind of like this idea of like work from the end state and backwards, the thing that's going to bring these assets top of mind to end users to end institutions is like can I use them where I need to use them and should I use them as the primary thing. I think that's what makes us win over the long haul.
You'll be very, very busy next year, I hear. How about the next 3, 5 years? Any plans that will take you longer to implement?
Yeah, I think I mean 3 to 5 years is there's a lot of stuff I think that is kind of happening. I think you know um a couple of one is we are still I continue to think that we are still at the very early stage for what we are doing, right? And I think the regulatory framework is one of the biggest things, but the honest answer from my perspective is though things like the Genius Act in the US came this year, no matter what happens, from like a political overhang perspective, like this is here to stay. And I think institutions have now leaned into it in a way that is really, really great. And so we're going to see, in my mind, a lot of institutions leaning in. Um, Honestly, like when I look at a forward-thinking institution like a Wisdom Tree, for example, or Franklin Templeton, I think that in many ways you all have like paved the way for the types of things that are possible. Um, and I think we're going to continue to see more different types of assets getting tokenized, for example. I think we've seen, commodities getting tokenized. We've certainly seen, some of the, like the money market funds, the other sorts of assets getting tokenized. We're starting to see some, instances of like private credit. There's real estate there. We are going to be figuring out what has the most value, and our goal as an ecosystem is to help facilitate and invest in those value drivers. So we will be pushing really hard, I think, on the institutional side to see how we can help folks bring more stuff on chain. So that's one. Two is like I really think like merchant services is this area where I think people have always talked about it as being an opportunity for blockchain. I haven't really seen it. And I don't know, like, there's a lot of talk about things like agentic commerce, and maybe honestly, like the only way, it might actually be the only way to do agentic commerce is actually using like blockchain for payments because of the kind of smart contract features and the composability of it. But all that stuff is still very early. And so there's going to be this maturing, and there's got to be a comfort, and there's got to be a liquidity that is all associated together. And so us investing in ensuring that all the component pieces are right so that you can rebuild the payment infrastructure, I think that'll be another core area. And then I think the last thing, and I talked a little bit about this because of the design of Stellar being global, but there is so much opportunity for us to do way, way, way more in kind of some of the other corridors that we have. And I'm really excited to see some of the core areas of growth for us that sit outside of, the outside of like the US or European markets. And I think our core focus is, we are um, placing folks and emphasis in LATAM. We have really started to double down on Asia Pacific and think about how do we work with some of the not just financial institutions, but governments as well as they're thinking about like adopting blockchain technology and being right there with them at a policy level. We think the African continent is so critical and so important in terms of empowerment. And you see these really wonderful movements in terms of consumer usage, certainly on like mobile device outpacing like bank accounts there. I think everyone's kind of heard that story. But how do you then leverage blockchain to create more efficiency, more value, more opportunity for saving, more opportunity for creating yield, more opportunity for actually doing all of these other things that may have only been available to more traditional markets and pulling them in. And so we are looking at projects as a foundation. Our goal is to invest in companies that we think are creating really unique and valuable solutions that are able to help everyday financial services. And so we will be really, really active in the ecosystem, looking for builders, hoping to attract new folks, using, I think these great experiences like our Meridian event, that we had in Rio, but we're having our next one next year in Abu Dhabi. So really trying to move that around so that we create presence at a global scale so that we're able to attract more builders.
Amazing. I think what I appreciate the most is your focus on what you say is velocity, right? And in terms of use cases, I think that you're right. In terms of the industry itself, it's very focused on TVL, and that's so these real world use cases that you've been mentioning. Uh, my question there for you is, what would you say are the gaps that need to be filled in order to achieve that high velocity, right? In terms of global payments, or if it's merchant payments as well, like what needs to happen from an infrastructure perspective or institutional perspective, what needs to happen for that to come to, fruition?
Yeah, so I mean, I think about so like one of the opportunities is so I think there's a couple funds structured like this where like we talked a little bit about like money market funds and the idea that hey, like this is active money that's always working. Being able to use a money market fund in a peer-to-peer transaction, I think like that's really exciting. What you see, I spent a bunch of years at PayPal. I was there when we acquired Venmo, and you saw this incredible growth in terms of Venmo users, how people use it. I mean, I still use Venmo. Then you probably paid someone in Venmo over this weekend or something like that. I'm sure it's very, very common. But when I look at it and I say, well, I mean, that money is just sitting there and it's just locked into your account. It's not really doing anything. How do you start to build institutional level comfort of being able to allow some of these assets that previously may not have been able to be used or transferred like this into the types of use cases that people will use? So I think that's like a layer, which is like, how do individual institutions get comfortable from a compliance and policy level to start to actually do some of these things and somewhat take off the shackles of what their assets were able to do before and being able to transfer them. So I think that's one of the big things that's going to accelerate velocity. I think making sure that the wallets that have availability are ones that are designed for proper use case. I think that's really, really important. Um, Ultimately, like when I think about a wallet and an asset that goes in it, I always try to think about like, how do you make it top of mind, right? Um, the remittance use case I think is super interesting, right? Because if you're sitting there with a wallet and let's say like you have like a relatively regular inflow of cash into that wallet, now it can be top of mind. How do we transition mind share for people to start thinking about that wallet, not just as something that like holds remittance, but is actually something they can do more things in there. So what are the value adds that you can put in there? And I think this is where the idea of like connecting into a global merchant network makes a lot of sense. If a merchant network is able to accept a wallet transaction and that wallet with a digital asset is top of mind from the consumer because it is getting funded on a regular basis, and they're not just thinking about immediately cashing out, but they're actually thinking about like, oh, how do I drive more utility? And the reason I might do that is instead of cashing it out, it's earning yield sitting there, but now I can transact with it. Now I think you've got this really exciting financial system, and one that again, like it's actually accreting value. I think that's like the core concept here, which is like you're building something that is like constantly accreting value for people who otherwise may not have had that value. And I think that's where you're going to see a lot of value. Um, Velocity for me, it really comes down to like focusing on the areas where we're seeing the fit and then driving it, getting institutions to understand the different use cases and what accessibility looks like, and then ensuring that when we think about projects, we don't get overwhelmed by like hype cycle things because I think that just creates a lot of noise. But just trying to speak kind of truth a little bit, maybe it's not truth, but just talk a little bit sensibly about, hey, what are we trying to achieve over the long haul? And I continue to think like why I love being at a foundation is the ability for us to have that long-term view. And you know how it could be sometimes, Ben. Like it can sometimes be hard to have a long-term view if you're constantly, having to operate against maybe, quarterly calls or all those sorts of things. I think it is incumbent on folks like us to help partner with institutions to help like drive that innovation forward with that view. And so yeah, I mean, ultimately, what we're trying to do is build open roads, not single railways between institutions. So hopefully, we're successful.
Exactly. No, we love that. And I'd say before we close then, we talked about a lot, right? What would you say if you had to pick one thing? Like what excites you the most? What keeps you inspired? One thing about whether it's the industry, it's stellar, what's that one thing for you?
Yeah. Um, so I hadn't really talked about it much on this call, but um, I think so. I'm really excited about how global we are, right? Like it's very amazing for me to be able to go and see people in all parts of the globe like taking advantage of blockchain. Now, stable coins has been this thing that everybody's talking about, but the reality is the majority of all stable coins are US dollar backed. I think something that is incredibly exciting that I want to invest my time in and think about is this idea of kind of like local stables or things that actually start to touch into like the hearts and mind of people in other economies, because I think there's going to be this tremendous place for people to be able to operate in their own currencies, but also to be able to create this network where you're able to seamlessly engage no matter where you are. So a US dollar stable and a Mexican stable, for example, can interact and operate and basically be totally interoperable on a blockchain. Like that, I think starts to unlock like real financial access at scale. And so I think designing and driving that interoperability, seeing how it grows, how it better connects the global financial system, um, and then ultimately the concept is like creating like the most effective on-chain FX market possible. Like that to me is one of the most exciting things that I hope we see. And some of those projects we're really excited about coming on to Stellar.
Yeah, no, that's great. And thank you. This has been a great conversation. If I've had one takeaway, right, or a few takeaways rather, I'd say it's not about TVL, it's not about tokenization as a technology, right? But it's about access. It's about creating a global system where finance is accessible to more people, right? So this has been great. Huge thank you. Thank you so much for joining us. I know you're a busy man, Raja, so appreciate you taking the time to join Crypto Clarified.
Thank you so
Yeah.
much.
Thanks, Dovile. Thanks, man. Lots of fun.
Thank you.
Talk soon.
Taxon. To clarify, the views and opinions expressed in this podcast are those of Wisdom Tree and the Stellar Development Foundation, and they are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.